Hey everyone, welcome back to Corporate Decoder. Today, Hennessy Capital Investment Corp 7 Rights HVIIR just filed their latest SEC documents, and I am seeing some interesting shifts in their financial position. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing shows a lot of movement in their cash reserves and their plans for a big business combination. Let's dive into the numbers and see what they tell us. So first up, let's look at the cash held in their trust account. As of the 31st of March 2026, this amount was over $198 million. This is the money they've set aside specifically for their business combination, like a big purchase they're planning. It is significantly higher than the $196 million they had at the end of 2025. This is good because it shows they still have plenty of funds available as they work towards their goal. Now, this is important. The filing shows Class A ordinary shares subject to possible redemption, and as of the 31st of December 2025, this number was over $196 million. But jump to the 31st of March 2026, and this number is zeroed out in the pro forma combined columns. This suggests that the company is expecting a large number of these shares to be redeemed, meaning shareholders are choosing to get their money back instead of going forward with the deal. This can sometimes signal uncertainty about the future of the business combination, and when we look at the shareholders' deficit, it tells a story. At the 31st of December 2025, it was a deficit of over $9 million. But after accounting for the business combination, the pro forma combined figures show a massive negative shift in the maximum redemption scenario. The deficit balloons to over $142 million. This is a huge negative number, suggesting that if many shareholders redeem their shares, the company will be in a very difficult financial spot. Looking at the transaction accounting adjustments, we see a lot of adjustments related to the business combination. For instance, under maximum redemptions, there are adjustments of over $178 million related to cash held in the trust account. This confirms that a significant amount of cash is expected to be paid out to redeeming shareholders. These estimated fees and expenses paid at closing are also quite high, especially in the no redemption scenario, around $26.9 million. This means a big chunk of the deal money goes towards fees, not into the actual business. Now, let's talk about who will actually own the company after this deal, which is now called New One Nuclear. In the maximum redemption scenario, the original HVIIR public shareholders are left with only about 1.3% ownership. That is a massive dilution. The initial shareholders, likely the founders and early investors, would hold around 6.8%. And the One Nuclear equity holders, the ones being acquired, would own a whopping 91.7%. This highlights that if most public shareholders redeem, the original public investors will have almost no stake left in the new company. Let's shift gears and talk about the business itself. One Nuclear Energy LLC. Their plan is to build these massive energy parks combining natural gas and nuclear power. They're projecting capital expenditures for phase 1 of around $270 million to build out the initial generation capacity. This is a huge undertaking, and they're relying heavily on future financing and customer contracts that aren't fully secured yet. For revenue, they're estimating over $616 million in the first year from power sales alone. Based on an illustrative rate of $95 per megawatt-hour, this is based on a hypothetical 1 gigawatt gas-fired energy park. Remember, this isn't a projection for the whole company. And their estimated EBITDA, which is like an operating profit before some costs, is projected at $361 million. However, they also point out that fuel costs are passed through to the customer, which is a key detail. Now, the risks, they're upfront about many of them. One Nuclear is still a development stage company with no operating history, no revenue yet, and no projects built. They face huge execution risks, meaning the chance that things don't go as planned is high. They haven't even secured binding agreements with many of their key partners yet. And the costs to build these nuclear reactors and energy parks are massive. They acknowledge they'll need a lot more money, and there is no guarantee they'll get it. This is a crucial point about HVIIR itself. The sponsor and its top people have agreed to vote for this deal. This means even if most public shareholders disagree, the deal can still go through because of their stake. They own a significant chunk of the company through founder shares and private placement units, which will be worthless if the deal doesn't happen. This is a huge conflict of interest. When you consider the HVIII board's recommendation for these proposals, you should keep in mind that there may be actual or potential material conflicts of interest between or among the sponsor, its affiliates, certain HVIII directors and officers, or promoters and unaffiliated security holders of HVIII. The The sponsor alone could get millions of shares of the new company for a tiny initial investment. This is a common red flag in SPAC deals, where the insiders have a much bigger incentive to get a deal done, even a bad one, than the regular shareholders. And speaking of dilution, the filing explicitly states that HVII public shareholders will experience immediate dilution. This means their ownership stake gets smaller because of new shares being issued. If the deal goes through and you don't redeem, you own a smaller piece of a potentially less valuable company. So what is the story here? It looks like a typical SPAC situation where the sponsor and insiders have a strong incentive to push a deal through, potentially at the expense of public shareholders who might end up with a very diluted stake or nothing if the deal fails. The financial projections for One Nuclear are illustrative, and the risks are incredibly high given its development stage. The research tools I use to find these filings and track this kind of information are linked in the description below. They really help me keep these videos going. That is my take. Stay decoded.